Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We are seeing signs of the US economy losing steam, just as the US Fed meets. First up today, the overnight full dairy auction, though, brought slightly lower prices, down nearly 1% overall. This was a smaller decline than the futures market had expected. In New Zealand dollar terms, the dip was marginally more, down 1.2%. In the end, the dip in the whole milk powder price was only 2.1% and far less than expected. The skim milk powder price dipped 1.3%. The volumes sold were at seasonal lows. All in all, an auction event that will change little. Also uninspiring were US retail sales in May. It slowed to a 3.3% expansion year-on-year from a downwardly revised 5% in the prior month. Given that US inflation is being recorded at 2.4%, the volume steam has gone right out of the American retail impulse. It is surprising many analysts. Month-on-month, retail sales actually fell. Overall, this was the weakest result since November 2024. And US industrial production fell in May too, down 0.2% from the prior month to be 0.6% higher than a year ago. These are also real volume numbers and signal what the Beige Book has been suggesting, a factory sector that is losing ground. And it is no better in their house building sector. The NAHB Wells Fargo Housing Market Index fell in June to its lowest since December 2022. Expectations were that it would improve, so another economic drag is building there. Builders aren't happy facing higher tariff tax costs when demand is leaking away. But these may be just a start. The tough new policies towards immigrants are being felt in ways that some foresaw and will have a long impact on American demographics. Suddenly, the outflow of people from the US now exceeds the inflow. And it is younger workers leaving, which is making costs for servicing an expanding older population rise, and much more suddenly than was expected. The speed of these changes is quite corrosive. The first time in 50 years they've had to face the fact that the US is no longer a magnet for the aspirational. And the big all-in-one US budget bill from the Trump administration, which is struggling to get congressional approval, is already having a depressive impact. International investors, including the giant sovereign wealth funds, face sharp new American taxes on their US investments. Most have now halted assigning funds to US opportunities. If the bill passes, there could be a rather sharp outflow of existing investments, one that would impact the US dollar and their current account. The US Fed FOMC is currently meeting and will report its decisions tomorrow. No change to their 4.5% policy rate as expected, but they will be watching the stagflation pressures of higher inflation and lower growth with some alarm, you would imagine. Across the Pacific, the Bank of Japan also held its key interest rate steady following a two-day policy meeting, keeping its 0.5% rate amid economic uncertainty stemming from US trade policies. This marks the third consecutive meeting after which the central bank has maintained the rate. The last increase came in January. In China, new data forecasts out from the IEA shows that China's oil demand is set to peak in 2027, a trend it calls a fundamental transformation in the global energy market. China has accounted for 60% of the growth in global oil demand in the past decade, and slowing demand in the world's second largest economy is set to contribute to a significant surplus in oil by the end of this one. But it is not all gloom. In Germany, the ZEW indicator of economic sentiment surged in June to its highest level since March's three-year peak and far exceeding market expectations. The sudden sentiment boost also helped propel the wider EU survey results. The US Treasury 10-year yield is now at 4.39% and down 7 basis points from yesterday. And the price of gold will start today at $3,387 an ounce, down $4 from yesterday. But American oil prices are still in the higher zone, up $2.50 from yesterday, at just on $74.50 a barrel now, while the international Brent price is now just under $76 a barrel. And the Kiwi dollar is now just under 60.2 US cents, back down 0.5 cent from yesterday. Against the Aussie, we're up 20 basis points at 93 Australian cents. Against the euro, we're down 10 basis points at 52.4 euro cents. That all means our trade weighted index starts today at just on 68.2 and down 20 basis points from yesterday. And the Bitcoin price starts today at $103,962 and down 3.7% from yesterday. Volatility over the past 24 hours has been moderate, just on plus or minus 2.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.